Into the trade setup, I'm Neeraj Shah, and the key news of the day is that while in India, the central bank has said that inflation is likely peaked out, in the US, it is turning out to be a bit of an issue. Prices rose about 7.5% last month from a year ago. So the US inflation was at 7.5%, the most in 4 decades. I know there's a bit of a hissing sound in my background. Please bear with me on that. So the US inflation at 7.5% was the most in 4 decades. The 10-year treasury yield jumped above 2% for the first time since 2019. And the Federal Reserve Bank of St. Louis President James Bullard, I don't have that statement right now, but he said, okay, we do. He said that he supports raising interest rates by a full percentage point by the start of July. The question, viewers, is that instead of 4, could there be more rate hikes? Can there be out-of-turn rate hikes? And will the markets react to them? All imponderables. But yes, did the markets react yesterday? You bet they did. The US markets came off quite significantly in trade yesterday, considering the fact that when the numbers first came out, they were not quite down and out, but then they came off quite a bit. So the US markets were certainly down in the session. Now, if you're wondering why is it that the Fed would be worried about this, because could inflation peak out? I think they were so behind the curve, so to say, that, and this chart on Bloomberg Terminal shows it very well, that because of the easy liquidity conditions, or even if the liquidity conditions or financial conditions at times came off, the inflation, the annual inflation pace, which is that white line, you can see how swiftly it has moved higher, and it continues to move higher. And numerous articles overnight would say that, oh, if you're tired of inflation already, don't be, because the Fed measures may not be enough to control it for the time being. So in the US, inflation is a clear and present danger, and it's showing in the way the markets came off. The futures are still okay, so therefore it's not all gone and lost, but certainly pain points. I think it will be showing in the rest of the world markets as well in the session today. We'll probably be starting off slightly weaker for most world markets, and the SGX Nifty too would be indicating that. So this is, of course, most world markets looking weak, as you can see in Asia. Nikkei is an exception, but others are mostly looking slightly wobbly. The SGX Nifty was actually down about a percentage point at a point of time at the start of the trading day today or thereabouts. Currently about 0.4%, if I'm not wrong. 1%. Okay, interestingly, it's still looking slightly weak. Well, let's wait and watch how this shapes up going ahead. Now, the SGX Nifty website actually shows the SGX Nifty at about 0.5%. So a bit of a, but a weak start nevertheless. That's the limited point, I think, that you can derive out of what the SGX Nifty is indicating. Now, what's the trade setup? I think down, but not out for the Indian markets is the likely pattern of trade today. I think it's very difficult to really try and draw levels and parallels simply because of the way US inflation has behaved, and the kind of pressure that the world markets have will be the kind of pressures that Indian markets have. So maybe don't look at levels per se, because the trend near term could be slightly different. Very stock specific, very likely. Watch out for cement stocks. They're seeing buying at local dealer desks could be interesting. And I think everybody should keep a keen eye out for the upstream names. And if they post good results by virtue of what the average gas prices and average crude prices are, the ONGCs, Oil Indias of the world, could well be in focus. And I'll tell you why. The results are today. Thank you so much for that, Juika. So the results today include an ONGC and Oil India, as you see out there. Some other interesting names include Ashok Leyland, and the commentary thereof could be interesting. Global Spirits, remember CIMB had come out with a note saying fairly stiff target prices, but it's an expensive stock, or rather a stock which has run up quite a bit after Kenneth and Brady first bought it. So keep that at the back of your mind. Motherson Sumi would be interesting, and Nazara Tech would be interesting. They've promised a lot. The last couple of quarters have been pretty good. Can they keep up the show is the question. So a bunch of very important mid-cap names and one large, important pharma name, which is Divi's Lab. Considering what API companies have done, I think Divi's, and most API companies are really bleeding. I think it'll be important for Divi's, which enjoys a marked premium upon others, to come out with a good show. So I think everybody will be watching out for this. Fund flows didn't look all that great. FIs back to a large selling number. Remember, I was talking about this yesterday. There was so much of chatter of, oh, has the FI selling slowed down? I mean, we had seen sub 250 crores or sub 500 crores in the first 2 days of February. Yesterday, we saw sub 1,000 crores, but not a trend at all. It's back to selling 1,732 crores. difficult to kind of come to a conclusion about when would this stop, to be very honest. I doubt anybody has a handle on this. Stocks to watch out for in the session today. In wake of lowering liquidity, I think valuations were lower for the uh, consumer tech companies coming off. So ZOMATO is the first stock on my list to watch out for. The numbers came out. Very difficult to look at the revenues versus blah blah. There are a bunch of other MTU related factors which are important. So instead of trying to do that, I thought it's best to get in a brokerage view which tracks this very closely. So Credit Suisse, and the reason I chose Credit Suisse, I could have chosen Morgan Stanley, which also encapsulates the results very well, or Jefferies, which has said that a roller coaster ride for Zomato begins. But I thought this was important. This was neatly done, and therefore I'm bringing this to you. They have an outperform rating looking at the current price, but the target price has been cut to 120 from 185. So anybody who thought, oh, Zomato was at 145, it's now at 95 or wherever it is, and therefore it's corrected quite a bit and it's cheap. Well, world over, some of these stocks have come off, so be mindful of that. The target price is no longer 180. Keep that at the back of your mind for most brokerages. They say that the third quarter was a weak quarter as GOV growth slowed down. They've lowered the target multiple to 2 times EV by GOV, given the sharp correction in the EV GMV multiples of global online food delivery partners like DoorDash. They still believe, they're still maintaining a premium to the global online food delivery valuations, and despite that, the target price has been cut to 120. That tells you a thing or two about what the valuations of some of these tech players are. So let's wait and watch what happens going ahead. In all probability, today's Zomato, which is already corrected a bit, would still start off weaker. Please keep that in mind. A couple of other weak numbers. So GSPL, or Gujarat State Petronet, revenues were up 67%, which is strong. But look at the margins. Howler, 10.6% versus 31%. Net profit down 37%. It's the margin picture which has hurt most of India Inc., if not all. And it showed in the way the stocks have corrected. Now, I don't quite have a handle on whether GSPL has already corrected quite a bit or no. But these margins, such a drop, you would presume that despite the revenue uptake, the stock could maybe start off a bit weak. Let's wait and watch. Cochin Shipyard, the other one. What a drop in margins. I mean, PSU's YOY drop in margins is quite strong, really, quite large rather. So revenue is up 27%, but the margins at 14.8 versus 42.2%, and a profit after tax down 42% at 129 crores versus 223 crores. Looks very wobbly for both of these. It doesn't look as wobbly for RCF, but the margin still drops, right? So revenue up 81%, margins at 6% versus 9.9%, and a net profit up 45%. So there is a growth in profits and revenues. The point is, the growth in profit is not as strong as the growth in revenues because margins have completely come off. Look at that, nearly 400 basis points drop in margins. So again, 2 or 3 names wherein the margin picture has looked very bad, and the stocks may react a little bit. Hero MotoCorp, the big boy, the numbers were pretty much in line with the Bloomberg estimates, which is why it's so low, despite it being a nifty name, because it may not react as much, right? Revenues at 783 crores, the estimates were 7,800 crores. Margins at 12.2, the estimates were 11.9. Net profit at 686, the estimates were 682. In all probability, it's actually done slightly better than estimates, wee bit, but largely in line with estimates, so may not react too much. Tata Chemicals, again, a stock which kind of stayed put. So revenues were up 21%. Margins came off a little bit, but not too much. Net profit at 93%. So strong growth there because of some one-offs. All in all, just kind of maintain par for the course. Trent was interesting. The best ever quarterly revenue in EBITDA. Revenues up 76% at 1499. Margins at 18.2% versus 20%. Net profit up 89% at 139 crores versus 74 crores. So extremely strong show. It's just that it's an expensive stock. But left to me, I mean, most people give premium for quality. I think Trent would continue to enjoy that. May not be a really big bang reaction, but we could be surprised. Couple of other stocks which have a QIP and an OFS. So Burger King, they've launched a QIP to raise about 1275 crores at a price of 129.25, which is about a 5.31% discount to the latest closing price. Could start a week, but if the QIP gets subscribed very well, you never know. The question is, Burger King just came out of an IPO. Is there an acquisition in store because of which they are doing this? Let's wait and watch. PB FinTech is the other one, which is There's an OFS as per money control. The founders will reduce stake in the firm via 140 million block deal. The founder stake sale is to fund the ESOP related leverages. The stock could start off lower because the large OFS doesn't quite sit well. Mahindra and Mahindra came out with numbers yesterday and the con call yesterday. I thought the reason why I'm bringing this Bank of America note is not because they have a neutral rating. It's not because the farm weakness was offset by decent auto performance. Two factors. One, that they said the risk reward is balanced because the stock is trading at weaker multiples despite the tractor weakness. But it is just that the analysts call Mahindra and Mahindra painted a very soft picture for the tractor segment, which for them is about 70% of EBIT. And therefore, you got to ask yourself if some of the other tractor companies like Escorts too could have a tepid 2022 or FY23. And if that is the case, if you have money parked in these stocks, you might want to revisit the thesis. I'm not telling you they are a sell. In all probability, Mahindra and Mahindra's numbers look the valuations look very comforting. But re-examine your thesis is the point wherein the largest player and some of the other industry notes are saying that tractors would continue to have a slightly weak 2022. I haven't covered some numbers, by the way. Didn't have all the thesis, but there are a couple of names which I looked at the analysis of Omkara Capital and they were doing this. So MTAR and Clariant Chemicals, very weak numbers and very expensive valuations. You might well see these stocks correcting quite viciously today. And strong numbers by Bharat Rasayan, very strong numbers, by the way. And both Sun TV and Z Media. Remember, yesterday we spoke about how media companies could be in action, and they were in action, by the way, because of news reports around the Network 18 group. But that aside, look at the numbers. Sun TV, extremely strong numbers. Z Media, decently strong numbers. So it's not a very large pocket. We don't have too many large listed names, but except for Z, of course. So Z and Sony merger, Network 18 group, something happening. Strong numbers for Sun TV, strong numbers for Z Media. It's a pocket that is certainly very, very active right now. So do watch out for media stocks. We spoke about this yesterday on the trade setup. I urge you to keep an eye out for some of the media names. Watch out for upstream oil. Watch out for cement as per dealer checks. Watch out for some of the result reactions, particularly the margin drops that we've seen in the likes of the PSU names like Gujarat, say Petronet, Cochin, Shipyard, and RCF could well be in action today. Thanks so much for tuning in. Have a safe, profitable day ahead. And if you're stepping out, please stay masked up.